My name's Charles Lawrie. I'm the director of Richardson Lawrie Associates.
Now, you've just given your breakfast briefing here at the Tanker Shipping and Trade Conference. The outlook for 2017 is, let's say, less than rosy.
Certainly less than rosy, and the main reason for that is despite looking at increasing demand on one side of the equation, we're looking at a very, very large order book due for delivery back end of this year into next year, even allowing for slippage. Those new deliveries are going to swamp the market. Plus, we see a downturn in the CPP sector. So those two factors, we think, will lead to a lowering of earnings in the chemical carrier market next year.
That said, there are one or two silver linings.
The silver linings really, I think, are a bit further out. In terms of deep sea trade, we are seeing underlying growth in the period over the next sort of 3-4 years, and we expect that to come through a little bit more in 2018 and later. If we're looking at short sea trade, there has been fairly steady growth over the last 4 or 5 years, and we expect that to continue over the period. So yes, there are some silver linings, and if we're looking at methanol trade in particular, we're seeing rising exports of methanol and, in fact, commodity chemicals in general coming out of the US Gulf and a bit later, maybe down the road, US West Coast. And also we're seeing rising imports of deep sea chemicals into China again. So, yes, overall, I think there is an underlying sort of healthy growth in the market that we see, and the short term is really just affected by the size of the current order book.
Now, you mentioned China. You predicted contrasting fortunes for China versus India.
Contrasting fortunes in the sense of the economic growth. So as far as China is concerned, we're looking at growth rates that will gradually decline from around about 6.5% this year, going down to something like 6% by, say, 5 years' time. India generally we're quite bullish on. We're looking at average growth rates of something like 7.5% over the period. So from that perspective, yes, we're looking at I suppose a more bullish outlook for India. Having said that, if we think in terms of the impact on chemical carrier demand, and particularly for, say, exports coming out of the Middle East, this is relatively short-haul trade. Unlike, obviously, product coming out of the States into China or the Far East in general, and also products coming out of the Middle East into the Far East.
You had some very interesting things to say around ownership in the chemical tanker sector.
Yeah, I think ownership clearly has been changing over the last few years. We have more entrants in the market, more operators that are able to provide contract of affreightment services to the industry, whether it's on a global basis like a Stolt or an Odfjell, or whether it's on a very niche basis, either geographically or in terms of the types of products. The other things that we're seeing is we're seeing more of the sort of the simpler CPP chemical ships moving into the market, if not on a continuous or 100% basis. We're seeing them pick up more of the spot business, typically things like BTX cargoes out of the US Gulf. And also the other I think recent thing that we're seeing is China is taking a more greater interest in owning and operating chemical carriers. So historically, if you look at the existing fleet, Chinese operators have accounted for something like 2% of the market. If you look at the new order book, then we're looking at ownership of the new order book of about 8%. So there does seem to be this underlying increase, which is, let's say, a potential threat to the traditional chemical carrier operators.
You fielded some very pointed questions from the floor.
Yes, I did. I think particularly in terms of trade growth versus economic developments, and I think that's a difficult one to be categorical about. Clearly, in terms of world trade, not just for chemicals, but world trade generally, traditionally we've moved from a historical ratio of trade to GDP of about 2 to 1. We've been through a period where it's been less than 1 to 1. And for chemicals, we've had 2 years recently, 2013, 2014, where the trade has actually declined for deep sea chemicals. So, and the question that arose, obviously, was the extent to which that's likely to be the pattern for the future, or will we see something different? From our perspective, we're starting to see something that's changing again. So for the current year, I think it's a 1-to-1 ratio that we're looking at. Going forward, we're looking at something that's more like 1.5 to 1 for chemicals. But I think I recognise there are risks to this. If governments become more inward-looking, if governments generally, and I'm not just talking about Donald Trump, I'm talking about Chinese, for example, and we see it in other countries. If countries are looking to become more self-sufficient, then we can see that in chemicals, for example, the producers may go further down the chain in terms of producing the end products, plastics and so on. The result of which obviously is that less bulk liquids will be moved around. We still favour the former view of the world, but recognise that this is a risk going forward.
You mentioned Donald Trump, and I don't think any discussion would be complete without some sort of assessment.
Well, we managed the whole of the conference without mentioning him by name, it's obviously too early to call. The man is already shifting ground compared with his sort of pre-election rhetoric, and softening his stance in many ways. But I can see an argument that says that if you look at the US situation, and they have cheap gas supplies, they have cheap oil supplies, there must be a temptation to think about moving further and further down the value chain in terms of producing petrochemicals, which again potentially could have an impact on the amount of bulk liquids that are being exported from the country.